Hello everybody. So right now, the average financial advisor will tell you that now is not the best time for you to invest into the stock market. Better hold your money or invest on something reasonable. Well, the reasons are what we're going to be discussing in this video. So make sure to sit right and let us dive in.
One of the world's most popular index funds just hit record highs, and I'm still changing how I invest.
What advice do you give for the average person that's looking to invest their salary or their wages?
Don't own US stocks. That's a simple strategy that you can act on.
But what about S&P 500?
No.
Really?
Yeah. And if you have a big position in US technology stock, my personal advice would be to sell it all.
So if you have been paying attention to all the whole financial headlines, you observe that the S&P 500 is closing in on its all-time high since 2022. Stocks are performing pretty well, and that's providing a great profit for investors. Now, here's the reason why most financial analysts and most investors are kind of worried. Now, the stocks that are providing all these whole great returns in the financial market, they are all technological stocks. And you know that we are in the AI race now. So a huge amount of money is being poured into all these whole AI startups. So that brings us to the reason number one why you should be somehow careful when investing in the stock market now. The first one is the AI bubble concern. Like I've said before, there's a huge amount of money that's being spent on AI. Companies are seeing AI as the new gold rush. They want to inculcate AI in all their products, which is not bad, but the rate at which all of this is all going is really concerning. There's a theory that's ongoing that these AI startup firms, they are built on a loop of debt. And now, when this chain breaks, only God knows the effect. So, based on this, experts are warning that crash or correction is on its way. Now, the second reason has to go with the extreme concentration factor, which has to go with ETFs. So, you know, ETF, which is exchange traded fund, is a collection of different stocks. So instead of just purchasing a single stock, let's say like Microsoft or Apple stock, you can just purchase a technological ETF. So with that brief understanding, the S&P 500 and most ETFs in the United States are heavily dominated by about 7 to 10 companies. And guess what? These companies are technological companies. And these companies, they also represent a higher percentage of the S&P 500. So each time you hear that the stock market is doing pretty well, just know that about 7 to 10 companies are doing perfectly well. So that means if these company stocks should fall, it's going to affect your ETF greatly, irrespective of other stocks that belong to your portfolio. That is why the best approach right now is not just to focus on the US stock alone. You should also broaden your horizon. At least try and invest in other foreign or international ETFs. It's going to help reduce the risk in case if anything should happen to the stock market now. The third reason has to go with overvaluation. So current market data are showing that the stock market is pricing at its peak. And we know how the stock market always behaves. When there is a period whereby the market is doing pretty well, like stock prices are doing very well, they have great return, we should expect a period of decline. So right now we are in the period whereby the market is at its highest valuation. So in the recent years, we should expect a drop in prices of company stocks. So investing now where the market is at its peak is not really the best option. And finally, history often repeats itself. So similar to the railroad era and the dot-com bubble, whereby prices rose way above reasonable levels due to extreme excitement. Many experts are suggesting that the same thing will also follow in this AI race. Considering the huge amount of money that is being spent on AI, it's not as if AI is not going to succeed, but the way at which people are taking into this AI is very concerning. So now that we are almost at its peak, it's not really the best time for you to jump into and start investing in technological stocks, because we should expect a period of correction. And now investing now is not really the best option. So this is a summary of the reasons why all of these financial advisors are advising you not to invest your money in technological stock or in the US stock market now. So with all of these whole points, what then is the best choice for you if you want to start investing now? The first advice would be, don't go all into the S&P 500. Instead, share your investment into two. 70% into S&P 500 ETF, like ETFs that fall within the S&P 500, and 30% into international ETFs. So that in case if there should be any market crisis or any update, your risk is being shared, is being lowered. It won't affect you 100%, but it is being reduced. So that's one of the best approach to go about in this period. Now, if you're a beginner investor, instead of just going to pick 1 or 2 stocks, it's better you invest on 1 to 2 ETFs. You can go with the VT ETFs, which invest on the world economy. That means if the world economy is doing perfectly well, your ETF will also do perfectly well. You're not just relying on the US market alone, but it's on the whole global market. The second one, you can go with any other ETF, maybe like a US ETF or maybe an international ETF. So that one will help to reduce your risks. And finally, expect volatility. You can't predict how the market will go. If you trade very well, the ones that gain in any investment are the ones that invested in the long run. So while investing, don't always expect that it's going to be all green. Always expect ups and downs. So your mindset should be long-term investment. So with that mindset, irrespective of how the market is playing now or even in the nearest time, you are always sure that your money is going to give you your expected value, maybe like in 10 years time or in 15 years time. So this is all I have for in this video, and until next time.